Thanks very much for being with us. I'm Sharon Constanson. I'm chairman of the South African Chamber of Commerce. I still have a voice. I've been standing for 2 days, 3 days, 4 days, whatever it is. And you are seeing the board who are present today, many of us, after a full working session of strategy that we've been doing all day. So if we all look a bit befuddled, we were looking for the blue sky and we found clouds. But anyway, we got rid of those and we dealt with them. So thank you very much for being with us tonight. We really appreciate it. We're actually getting into the swing of in-person events, 2 in a row, one day after the other, which is actually really exciting. But you're not here to listen to me. I'm going to hand over at this point. Goodness me, the light's bright. Hand over to Jerry Botha, who I've known for a good number of years. Jerry knows his stuff. If you need to know anything about tax, or you need to get certain things fixed when it comes to tax, he is your man. He's a very, very good working knowledge of the South African tax system, and he's going to share with us some of the current issues and some of the current changes. It's going to be short because you guys are standing. There are some books and things that you can have a look at, but the most important is you know who he is, so you know how to get hold of him thereafter. So I will catch up with you all in 15 minutes' time. Thank you very much. All yours.
Thank you, Sharon, for a very, very good introduction. Thanks everyone for coming out today. 2 years since I've been to the UK, and I think if you live here, perhaps the changes don't strike you so much, but things have changed a lot. You know, I mean, real estate I never thought would stand empty is empty. And I speak with a lot of clients and people, and apparently this Brexit thing has hit people far harder than what I ever imagined it would be. I really thought it would be kind of a non-event. But again, I think that is part of the cycles of life. And I think if you are where we are, where you've got energy and you've got hustle and you are busy, you want to be in a time when it's a bit of a dip, because that is when the foundations get shaken a bit and when there is opportunity. And I think that is probably the reason why I left the UK many years ago. I felt South Africa represents a lot of opportunity. And I can tell you guys, if you at the moment travel in Africa and you go to a place like Harare or Lusaka or Lubumbashi, and I see they're shaking heads, you'll see there's a buzz. Things are happening there. Mining is going well, and there's guys with lots of ideas. And I think that there's huge opportunity, obviously, for South Africans into those territories. And I think there's always huge opportunities for South Africans using London as a base. So to this year's budget speech, it might sound like a bit of a non-event, but if you kind of look a little bit deeper, there was quite some interesting stuff in there. And I think we all know things are not that great for South Africa finance-wise. So personal income tax, still by far the #1 highest tax collection in South Africa. I think 580 odd billion. Corporate tax, third, way down to 270. Individuals is where SARS collect their money. Second statistic, very concerning, but I guess also great opportunity, is at the moment, government paying debt ranks as the third largest expense in South Africa. So they spend more money on paying debt than what they spend on, for example, on police. I think #1 is learning and culture, and #2 is social development. If you look at the 5-year plan, and this is from the budget speech, I'll gladly share these details with you, the little graph, debt in 5 years is going to climb to a strong second highest expense. 10.7% growth per year in extra debt repayment cost. So it means government is planning to spend a lot more than what they collect. That means there's obviously opportunity in borrowing that's going to happen there. But I mean, 10.7% per year is a massive increase compared to the others. And if one choose to view it from a critical perspective, perhaps you can say, surely that can't carry on. There's a little bit of stealing from tomorrow here. A generation after us is going to have to pay that debt because you can't just keep borrowing more. Some of you have to tighten that belt. But in the next 5 years, according to the announced plan, they're going to spend a lot more and they're going to get that money by borrowing. And that is in the budget speech. It's not a message I'd like to tell you, but that's the truth. The second thing that I just thought is an interesting statistic is who really pays tax in South Africa? 14 million taxpayers. More than half of that 14 million pays zero tax. 113,000 of that 14 million pays 25.6 or 7% of all the tax. The second highest bracket is that bracket 500 to 715,000. I think they pay 17 to 18% of the tax. Why is that bracket interesting for me? That is your young qualified professionals leaving. And I think we obviously see as a firm a lot of those. And I can tell you now, there's so many countries that love those young South African qualified professionals. The Netherlands welcomed them with open arms. The Netherlands, you get that guy probably quicker into the country with a work permit on a way towards EU residency than what I managed to get through Heathrow Airport standing in the queue when I tried to come in a couple of days ago. That 113,000 layer, those are the guys that a lot are leaving South Africa. And those are obviously our clients. And that is sad in a certain sense, but I guess there's also opportunity in that. And remember that tax burden in South Africa is very high. Top tax rate of 45%. And then if you pass on, another effective 25% estate duty. Now, if you do the calculation, a lot of our clients that really has got many zeros behind their names, they do the mathematical sum. And it's actually quite expensive to retire in South Africa one day and to do that. Then in terms of the budget highlights, I think there's three things that they are specifically targeting expats once again. The first thing is, and then let me just take a step back. For many years, there was not a single change on South Africans working abroad. Past 5 years, every single year, they hit that group with tax law changes. First, obviously, we want to try and tax the income, then guys break their residency. Now, what is on the table? They go after the retirement savings. They push through that 3-year lockup rule. So if you've got money in South Africa or family's got money in South Africa, do not just leave and then withdraw. First withdraw and then leave. If it's not a retirement annuity, get your timing right. Get your sequence of stuff right. Secondly, they try to push through a law that would effectively tax you on a fund when the money is still in the fund. But that was contrary to international law. And there's a bit of a loophole in our tax treaty law that we as a firm may or may not have exploited. But I mean, as SARS always says to you across the table, we are only here to apply the law, you know, and so do we. So they tried to change that, but they couldn't because they would break a treaty. So they backed off on that. And this year's budget, they says, yes, last year we backed off on that, but this year we're gonna still try and do it over the coming years. We're just gonna go and renegotiate the treaties. So the point I'm trying to make is they're gonna succeed in doing this. You are all on notice if you've got retirement funds, I think now it's not a bad time to look, is it really such a good idea to keep your money there, or rather externalize it? And this is not good for South Africa. South Africa should have great rules for people to keep their cash there, and great rules for keeping their retirement there. They should make it friendly to keep it there. The third rule that they've announced is if you are an expat, you're not going to get the full interest exemption anymore in the year that you leave, or the full capital gains tax exemption. And again, it's a petty change, but again, it's not a friendly change in the sense of making it easy for you to keep stuff there. And I think then, of course, you are all of this kind of catch-22. You know, I don't deal with many expats that leave South Africa and don't love South Africa. There are a segment of that. But for most South Africans, South Africa is still home. And you're absolutely allowed to have a piece of land there. And you're absolutely allowed to have a beach house there. And it will not change your residency status. We don't have that as part of our law like Australia has got. And you must just structure it well. And I mean, if I look at the property prices for small flats in London that you can't swing a cat properly, you can get a pretty decent house at Clifton, or quite a large tract of land of a couple of thousand square hectares for that. Then the last thing I just want to kind of briefly talk about is that the third thing about expats is they also said they want to start doing joint audits. And that's a legislative change that was missed by many people in the tax budget announcement. And again, if you're interested in that, I'll share that with you. But what they said is they're going to legislate that as SARS officials, they can contact other authorities of other countries and do a combined audit. You know, to say, you tell us on this side that, but we want to kind of talk to other guys to make sure that those two parts match one another. It's fair, but they kind of caught onto something because they were remarkably bad at doing that in the past. And I mean, I qualified in UK tax so many years ago that I'm just dangerous, but try and explain to a SARS official a remittance rule, and they won't get that. So those are the three expat changes, and let's leave them there. Let's talk about high net worth individuals. This is the next focus. So they've got this dedicated high net worth individual unit. They've got definitely a smarter class of individual working there. We know them all by name. So if you come to me and says you're getting audited by SARS or verified, or you're asking for a special approval to get, you know, 100 or 200 million out, because obviously you can get any amount of money out, you just have to approve it. The first thing I ask is, who you're talking with. And if it is somebody that we don't know that well, we says we don't think we should be too worried. And if it's certain individuals, I can tell you based on their personality type, kind of where the audit is going to go with you. And we will steer accordingly from there. Now, they've announced that, and it's peculiar wording, they say to address non-compliance and fraud, they want all individuals that has got specified assets. What specified assets might mean, I do not know. You know, I wonder if certain special class share structures that I've put in place would qualify as specified assets. I'm not sure. But if it's over 50 million, they want you to every year make a declaration of those specified assets. And then they said something very interesting, specified assets and liabilities. Now, of course, those of you that's in finance, probably a couple of bankers in the room, smarter guys than me, would know that you need to know how to use liabilities as part of good tax and estate planning. Or if you decide potentially you might leave your husband or divorce is on its way, it's also good to have many liabilities. So every year they want those guys to disclose their specifies assets and liabilities, why they're doing that. And then they say they want to understand. Now, that is just nonsense. They understand extremely well, based on the audit they've been doing on some of my clients, what goes on there. They want to understand what those assets and liabilities look like. And then they say, in line with the Davis tax committee. And what did Judge Janice Davis recommend for South Africa? A wealth tax. So they're not saying it, but you must kind of connect these dots. And obviously they start off at 50 because that's a safe place to start. But I guess there's no reason they can't drop it to 30, 20, perhaps 10. And obviously understanding assets and liabilities, they would understand what there is to tax, but there must be a reason behind that. And that high net worth individual unit, they are efficient. I've hired a couple of smart guys there, and I think it's going to be interesting and fun times dealing with them. I think the last part that just amuses me slightly is those guys that's worth more than 50 million, those guys have been implicated in all these commissions and stuff like that. You know, that perhaps took some tender money or stuff like that. In South Africa, there's a big thing around protective equipment, you know, tenders and stuff like that. Do we think because it's now this new rule, suddenly they're going to start disclosing that? No, we know who they are. They're in the Zondo Commission reports. They should just get prosecuted. And you'll see in the Sunday Times about 2 weeks ago, the commissioners complained about how the National Prosecuting Authority is not doing their part in prosecuting. In the past year, our firm had a couple of guys that approached us, and I've got it kind of on the slides where you get this little NPA notice that you must please appear in Court B, you know, in the Randburg Commercial Crimes Court for not filing tax returns or for a tax-related offence. And that's the stuff where confidence disappears in seconds. That is where your universe changes immediately, where they just have a hard look at you. And remember, in South Africa, intent is no longer an excuse to be criminally convicted. They've removed the intent provision. If your tax return is late, haven't filed something, haven't disclosed something, forgot to declare the rental income, forgot to declare SARS, that you have got a deemed disposal of your assets when you become non-resident, intent is no longer a requirement. And why did they go criminal? Because they're after the penalties mostly. And that penalties is obviously normally 200%, which they then, with a bit of negotiation, reduce down to 100%. So if you owe them $1 million in tax, they can ask you 2 million penalties plus interest, but normally they negotiate you down to kind of $1 million. And that is not something that I tactically advise you fight against, because there is only one case where at the Supreme Court of Appeal level, they've reduced that penalty from 100% to 50%. All other cases, they've kept the penalty, so it's not something that judges like to give in on. And in some cases, they've actually increased the penalty. So be careful of where you play with these things. So we are definitely in South Africa kind of putting the squeeze on the market from a compliance perspective. Make sure that you're squeaky clean. But guys, please, in Africa and South Africa, it's, you know, there's a buzz, I think, in terms of business. There's opportunity. We see so many South Africans moving back and doing the remote work thing from South Africa for UK firms. Before you come to South Africa, don't have the intention of coming back to South Africa permanently, because when you become resident day one, right, it's very responsible to do that. say you're just coming to South Africa to check out the scenery for a couple of years first and see if you can climatize well before you come back permanently, and then after that you might stay longer, or you'll make up your mind at that stage, because we still have an intent test to deal with. Just some final thoughts. Stuff that we find very interesting at the moment at SARS level is they are looking at the work visa, work permit side, giving our passports, other passports closely with the tax. They're looking very carefully at Forex when you bring money in or out, what you declared on those BOP forms as your reason for sending money in or out. So make sure that you've got consistency in disclosure. And these things are not rocket science. It's just good advice. Make sure that you've got consistency. Then lastly, guys, I'm not here to sell books, because anybody of you that's published a book would know you don't make money from a book. You do a book so that we can say, we wrote the book and we're proud of that. And it is something that I think, you know, we association guys, we give back. I mean, Sharon, you don't earn salary from what you do. And I think then, you know, for us, the book is just part of also giving back. And you're welcome to look at this. This is a second edition. This is it's when they asked us to do a second edition, I said, guys, I'll do a second edition, but please, I'm getting older. I like to feel stuff still in my hands. You know, I don't want to do this PDF book. I want it printed, you know. So you must please buy these books for friends, you know, not that the money ends up with me, it ends up with LexisNexis, but it's a proper book, and we're very proud of what Judge Dennis Davis wrote for us in the foreword again, where he said the second edition of this important work is particularly timely in that since the publication of the first edition, that's now 3 years ago, significant changes that will impact expatriates in particular have been implemented. Subsequent to the publication of the first edition 3 years ago, the major change to the taxation of remuneration, which accrues to South African from employment outside South Africa, has become effective. This controversial amendment has raised the spectre of double taxation and hence demands the careful analysis that will be found in this new edition. A further change which has required analytic treatment in the new edition is the phasing out of financial immigration and a new process for persons who wish to withdraw their retirement interests when they cease South African tax residency. Beyond these two fundamental additions, the second edition incorporates the subsequent amendments of our tax legislation that impacts on the subjects of this work by the judge. So we're very pleased that he's written kind words about us. And for those of you that like some of us, I think many of us in the room, deep in our soul lingers that bit of academic, you know. We're very proud of that. And yeah, Sharon, thank you for the opportunity. Really appreciate it.
The first thing I'm going to do is ensure that everybody else sees the book. So I'll do the advert part for you. I think what we've just had from Jerry was some of those little snippets of the things that you actually pay a fortune for. You've got 20, 30, 40 years of knowledge that we've just gained in 15 minutes for nothing. And I really appreciate, other than the fact that thank you, Standard Bank, for sponsoring us to have such a wonderful evening together, such a wonderful opportunity. Marissa's the other part of the business. Marissa does the immigration side of the company. And thank you very, very much for that. There were some wise words and some frightening words, some interesting words that we got there. But thank you for 15 minutes of an unbelievable download of knowledge. Now you can have a drink and enjoy yourself. Thank you, everybody. Only thing we've got to do is we need to be out of here by 8, but let's thoroughly enjoy ourselves until then. Thank you very much, Standard Bank.